Back here, tune into Midcap Radar on CNBC TV 18, where sources tell CNBC Awaaz that the government may increase ethanol prices up to 3 rupees per litre soon. Abinash Verma, Director General of the Indian Sugar Mills Association, joins us now. Mr. Verma, good afternoon. Thanks a lot for joining us on CNBC TV 18. Well, first up, are you aware of this price hike that government may do on ethanol? And if it does come about, what kind of benefit will the industry see?
Yes, hi, good afternoon. See, every year the government revises the ethanol prices, and the supply period starts from 1st of December and ends on the 30th of November. So the tenders are expected from the oil companies, I believe, in the next 15 days or so, once the government of India approves the ethanol prices for the next year. So what we hear is the government is going to revise the next year's prices. And if you really look at the basis on which the prices are revised, number one, the basis is the sugarcane price, the FRP of sugarcane, which has been increased by the government by rupees 10 per quintal of sugarcane. So that is going to have a direct impact on the ethanol prices. Second is, as compared to last year, same time, the sugar prices, the ex-mill sugar prices are about 2 rupees per kilo higher. So that will also have an impact on the ethanol prices. Now, second question that you asked is with regards to the impact that it's going to have on the sugar mills and the ethanol business. Certainly, if the ethanol prices are going to be increased in the range of 2.5 or 3 rupees per litre of ethanol, it's certainly going to improve the returns of the sugar mills. Now, a lot of sugar companies have increased their capacities or have set up new distilleries to produce ethanol. So therefore, people who are going to produce more and more ethanol by diverting some of the sugarcane juice into ethanol, they are going to really benefit because of higher price of ethanol, as well as by reducing some of the sugar production.
Mr. Verma, so would an ethanol price increase of 2.5 to 3 rupees per litre be sufficient? Is that what the sugar industry wants?
Yes, I believe so. I certainly believe so. See, basically, what we are now looking at from the Indian sugar industry point of view is trying to reduce some of the surplus sugar. And if we have to reduce the surplus sugar and divert that into producing more of ethanol, we need to get a price which is either neutral or higher to the return that we would have got from sugar. And therefore, this increase of 2.5 to 3 rupees will not only compensate for that loss of revenue that we're going to have if we are not going to produce sugar and produce ethanol. But the more important thing will be that sugar is surplus. And this surplus sugar keeps lying in our godowns for almost about 15 or 18 months because we are not able to sell it during that time. If we are going to convert that into more of ethanol and supply to the oil companies, our payment comes within 15 days. So it is improved cash flows, reduced carrying cost on that sugar, and better payment to the farmers.
So, Mr. Verma, in that case, can you tell us and quantify what is the current buffer sugar stock that can be converted and diverted to ethanol production?
Let me correct myself. I'm not talking about diverting the sugar which has already been produced. I'm talking about diverting the sugar cane juice and the B-heavy molasses in the next season, which would have got used to produce more sugar. So it is not the sugar which is already lying with us. It is next year, if we were supposing a sugar mill was supposed to produce, say, 1 lakh tons of sugar, they would now produce something like 85,000 tons of sugar. And that 15,000 tons of sugar, they would have diverted into making of ethanol by diverting the juice itself. So juice doesn't go into making of ethanol, making of sugar, or the B-heavy molasses doesn't go into making of sugar, but goes into making of ethanol. See, what is happening, a lot of big companies, say a company which produces something like 10 crore liters of ethanol, or they might be producing about 12 crore liters of ethanol next year. So 2.5 to 3 rupees straight away gives them almost about 30 to 35 crore rupees extra as compared to if the prices would not have been increased for ethanol. Plus, the cash flows come much, much earlier.
Does the industry have the capacity to produce ethanol, increased or higher ethanol immediately? And what is the demand for ethanol vis-a-vis the supply?
See, first of all, let me tell you about the demand. The demand, there is no shortage. I mean, at even 10% ethanol blending, the oil companies would be looking at anywhere between 400 to 450 crore liters of ethanol across the country. This year, because there was a drought in Maharashtra and Karnataka, those two states could not supply enough ethanol, but we have been able to contract for almost 194, 195 crore liters.
After the last question.
And that is what we will be supplying this year. But expecting that the next season will be a normal season from Maharashtra, Karnataka, we should be, I would personally expect, touching about 300 or 325 crore liters. So we would be supplying hopefully around 320, 325 crore liters next year, touching that 8% ethanol blending in the country, but still short of the demand of the oil companies. Secondly, on the question of capacities, the country has today, the sugar industry has a capacity of producing anywhere around 425 crore liters annually. And therefore, we have the capacity to do about 300, 325 crore liters in the year. Not a problem. Plus, as I mentioned, a lot of companies in the last year or last couple of years have set up new capacities, new distilleries to produce ethanol. And a lot of them have expanded capacities.
Okay. So, Mr. Verma, last question before we let you go. You did speak about 325 crore liters of demand next year that you are expecting. But what impact does low crude price have on ethanol blending or ethanol production? Is there any linkage?
Very important question, and good you asked. And this is something that I think a lot of investors, a lot of people listening to us would want to understand. See, what has happened in the last 6 months, the crude oil prices have dropped to a minimum of $20 also per barrel. It has improved now. And there were a lot of questions that will the government continue with the ethanol pricing? Will the government continue to encourage ethanol blending in the country? The government did not shy away. We have not seen the oil companies even shying away from taking. And now the latest is, despite the fact that the crude oil prices are down, the government is looking at increasing the ethanol prices. That is number one. Number two, let's understand quickly where this everything is coming from. The Honorable Prime Minister, Mr. Modi, is personally keen on this ethanol blending program. We heard him speaking during the Independence Day saying that ethanol, we are going to achieve 200 crore liters this year. Next year's target is about 300 crore liters. The whole objective or the purpose behind this ethanol program is, number one, to help improve the returns of the farmers, to double their income or a part of that. That is number one. Number two, improve your domestic industry. Number three, reduce that import dependence to whatever extent. So if we are able to move to 10% in the next year, we would have reduced petrol consumption across the country by 10% from a domestically produced commodity. Fourth, and very importantly, wherever ethanol is used, it improves the air quality. But because it reduces the air pollution or the emission which comes out from the car engines. So from all the 4 points of view, the government of India is continuously encouraging ethanol blending and ethanol prices.
Right.
All right, Mr. Verma, we'll leave it at that. That is ISMA saying that there is a high likelihood that ethanol prices will be revised higher by up to 3 rupees per litre effective 1st of December. Let's move on. Market regulator SEBI has rejigged the mutual fund riskometer. They've introduced a new category of very high risk. This is something CNBC TV 18 Sumaira Abdi had first alerted us on the 16th of September, and now it got confirmed. Sumaira joins us with the details on this story. Sumaira?
Yes, these new rules will make risk more representatives for the mutual funds. One, of course, is that the new very high risk category has been created. As of now, it was only up to high. Now there's a very high category that has been created. Risk will be computed scheme-wise and not category-wise. So earlier what used to happen was that, all credit risk funds are moderately high risk. All, ultra-short duration funds are moderately low risk. Now it will be that even within a category, one can be high risk, one can be low risk, one can be moderate. So therefore, an investor will know really what they're getting into. Now for debt funds, the important thing is that duration funds, now have criteria in terms of how their credit quality will be judged. Credit funds now have criteria on the basis of which their duration quality will be judged. As well, both credit and duration funds now have the newly introduced liquidity risk. So, there's a grading that has been announced, one being the least, and then it goes on and on. So basically, your underlying securities will be evaluated on how they fit into this grade scale, and then a simple average will be taken out to realize where your scheme lies in the riskometer. In the equity funds, the important thing to note is that the risk level, or the graded scale from where the computation can be done, begins only from 5. Remember, for debt it begins from 1. In equity, that the starting point itself is 5. So this means that all equity funds, it doesn't matter which category they fall into, if it's an equity fund, it will go into that high and very high category. It can no longer be a moderately high risk. It will mandatorily be high and very high risk. Equity funds will also be judged on the basis of volatility, impact cost. So basically, the average of the last 3 months will be derived. And then they have their own grade scale on the basis of which this will be computed. So basically, in the new riskometer now, if your reading comes to, like, say 1, for instance, it will go into the low category. If the risk comes between 1 to 2, it will go into low, into moderate, and then it goes on and on and on. So basically, anything above 5 will go into the very high risk category, and this will be evaluated on a monthly basis and disclosed.
All right, Sumaira, thanks a lot for joining us with all those details, but it's time to head into a short break. But before we do that, here's something that you, our viewers, must take note of. CNBC TV 18 and National Stock Exchange have come together to promote investor awareness through a special campaign, Informed Investor, that empowers you to make the right decisions with your money. When a stranger asks for our home or car keys, we immediately reject the proposal without having any second thoughts on it. Similarly, we need to make sure that we keep our passwords of